Hi everyone, Marv Eisen from Timeless Dollar, and today is March 7th, and the market's just closed. It's just after 5 p.m. New York time. The market opened up, and there really wasn't an opportunity for a gap trade. The market opened just where it closed on Friday, and as you can see, it went down from there. Not surprising, being that there is a war on, and there are a lot of unknowns. The market is driven by sentiment, and I want to make a point on building on a video that I made maybe about a week ago, where I said, don't try to catch a falling knife. Now, it's quite simple to see that the sentiment was to the downside, but I want to call your attention to periods that I'm highlighting over here, over here, over here, over here. If you're trading in a market that has definite sentiments that shows a trend to one way or another, don't try to trade against that trend. Over here, this was a fake out. Right over here, this was a fake out. Anybody who's got any sense is not going to look to catch a falling knife when there's a war on, when oil prices are approaching $120 per barrel, when there's so much uncertainty. If there's a trend and whatever your indicators say, and I only use the stochastics, don't trade against the trend. Right over here, stochastics were at an oversold level, right? Oversold level. So people might have thought, well, it's oversold, so I'm going to jump. Don't do that. Don't fall for this fake out. And that's really the whole point of this video. Don't fall for the fake out. When there's a trend and you think that the market is going to be trading toward a negative result, which of course happened today on March 7th, don't try to catch the falling knife. Don't trade against the trend. If the market looks to go up briefly, don't jump on. Don't think that you know something that the market doesn't know. Don't try to catch the falling knife. Trade with the trend. You'll always be okay. Even if you take just a small piece of the action for any one day, find the trend, trade in the direction of the trend. If your indicators tell you that the market is going to start going the other way, don't do it. Don't fall for it. And if you're thinking of doing it, remember what I just said. Don't fall for it. There's always another day to trade. Find the trend, trade in the direction of the trend. If it goes the opposite direction, and it will, don't fall for it, because these are head fakes. These are head fakes. These are head fakes. Don't fall for it. Okay, so that's my video for today. Marv Eisen from Timeless Dollar. And if you're looking for some information in terms of improving your trading, check out my site at timelessdollar.com. I offer a number of different trading courses, one of which is even free, and I would recommend that. And I just want to leave with one final word. I believe in targets because they've proven themselves so reliable over 75 years that there's no sense in trading where you don't know what the target is. For instance, a gap trade is a target. The price for the close of the previous day is a target. The resistance, the calculated resistance, is a target. Doesn't always hit it. Certainly didn't today. The support point, again, it's a target. After it goes down there and I see the trend, I don't want to trade anymore. I don't want to trade anymore because my targets have been breached or reached, and I'm out of it. I want to know, I want to have reasonable certainty that there's a target that the market is looking to attain, and most likely will, and I'm going to trade in the direction of that target. But when the market is trading in a trend and my target is against the trend, I will not make the trade, nor should you. Anyway, so that's my 2 cents for the day. Marv Eisen, the Timeless Dollar. Thanks for watching. Trade safely, use a lot of patience, and I'll see you in my next video.